Good morning, everybody. Welcome to the Flow Show, Tuesday, 28th of May. Shortened week this week due to the holidays yesterday. Hope you're doing fine and dandy. Morning, Kay. How you doing, mate?
Hey, morning, Ryan. Morning, everybody. Hope you had a good, longer weekend for those who enjoyed it. Did you have fun with your people staying over at your place this weekend, Ryan?
Yeah, met a few people down from London. Yeah, we had a good couple of days and then out with the family yesterday for a nice walk around an old Viking castle near us, which was very nice. Nice weather at least. How about you, mate?
Yeah, I mean, the weather was good, huh? The weather was good for once. Hopefully, that's not our summer done already.
Well, looks like it, given it's hissing down
Yeah,
today
exactly.
already.
Mm.
Who knows with the weather? Let's leave that there. Right, let's get stuck into it because quite a bit to get through, a couple of days worth, really. So we shall kick things off as we often do over on the Asia side of the planet. Chinese Vice Minister says that China is hoping to expand trade with Mexico. So that's one to keep an eye on for what goes on with CNY, CNH, and the Mexican peso. Over at the Bank of Japan, we've had a few BOJ members waffling about what they may do with their monetary policy framework. And Ueda was in a reflective mood, shall we say. He said that we have made progress in moving away from zero and lifting inflation expectations, but we must now re-anchor them, this time at the 2% target. Says with hindsight, the introduction of a clear inflationary target could have influenced the discussion before the Bank of Japan's decision to terminate zero interest rate policy in August 2000. Says although it is difficult to attribute the subsequent deflation solely to the minor rate increase, the termination of NERP may have weakened the efficiency of forward guidance. BOJ Deputy Governor Uchida says it's not so clear if Japan has overcome the deflationary norm. Says the main driving force for these developments and long-awaited structural changes are labour shortages. Sees higher menu costs together with mild inflation have slowed the pace of price adjustment. And for us, the central bank, this requires more effort to get out of this situation. Now, some in the market have said that this waffling by Ueda has paved the way for further hikes. I kept them on the table just from what they were saying about, how some things they've done in the past they may sort of use them or not use them again to forecast the future. I don't see too much in that. We know they've already looked past a lot of the data, for example, that we've seen weaker inflation numbers. They did get some PPI data out this morning, the corporate service price index, which rose to the highest since March 2015. So that shows a bit more influence coming into the price factor, that there are still some price pressures there. Kay, did you have any thoughts about this waffling? I mean, it's mainly talking about what they may do in the future with their framework as opposed to policy now.
Well, yeah, those comments were, but it's I'm starting. Well, of course, the services price index rose, but then the read an article that all the underlying measures of inflation are coming back down. I mean, we've seen this before. We've talked about that so often. I mean, they're in the window, the ideal window, but that window could be closing, and so therefore. I maintain my opinion that I'm not going to close my own window on them moving in June, especially if we see the yen continue to be as weak as it is. And again, we speak about that so often, but you may see dollar yen being very stable, but then all those yen crosses are again gradually grinding higher, and yeah. I don't know what is playing really on Ueda's mind right now. He still doesn't seem to want to go too fast, but they may be, yeah, maybe pushed into doing something. For the rest, yeah, all those comments, they come back, and it's roughly the same, just with one or two words different every time, but nothing really where we can really stick our teeth in, especially not on the all right, let's go out and buy yen side, because they are going to be fiercely on the move. That's still not the case, and the market is still continuing to sell yen regularly.
But could they? I mean, could they sort of shoot themselves in the foot if they hike in June, and and the market sees it more as a
Yeah,
move against FX,
yeah.
with inflation weakening? Could that do them more damage and actually see yen weaken even more?
That's the question, right? Because the market may see it as a bit of a panic move, and understand that MOF on their own cannot stop the yen. They need the Bank of Japan to help. But it's how they will bring it over. Of course, we are going to understand it as a bit of a panic move against the currency, and that in turn may not last for very long if it underpins the yen, depending on what they exactly do and how they bring it over.
Yeah, yeah, exactly. But yeah, I mean that would certainly be a bit of a departure. They're telling us that they won't hike until inflation is
Mm,
sustainably moving in their direction, and then they hike when it's going the other way. That would be
yeah.
a definite break of the mould, should we say? But yeah, we've got a few weeks to see what happens with that. Finance Minister Suzuki has been talking to some government businesses. They're not thinking of cutting income tax for multiple years, so they want to get some of their bucks back with all these wage rises. Obviously, higher wages means higher income tax, and they don't want to start, not filling up those government coffers. Um, what the government has done, it's upgraded its monthly view on industrial output in its latest economic report. Says there are signs of a pickup emerging. So again, some looking forward to the new fiscal year rather than what's been happening in the past. Over in Aussie land, retail sales came in a little bit softer than expected, 0.1% on the month for April versus 0.3 expected, but it was again this month following a drop last month. And just bouncing back to the BOJ quickly, this BOJ core measure came in softer at 1.8%. That follows all the other CPI data for April that we saw that came in weaker again. They're going to be looking forward or looking through those sorts of numbers. Over at the ECB's Nagel expects wage developments to flatten and is seeing positive indicators for German growth in the second half of the year. Says we can probably cut in June, and then we'll probably have to wait on the next move until September. ECB's Muller says a wage jump doesn't mean the inflation slowdown has stopped. He's was hinting at those wage numbers that we got a week or so ago. ECB's Lane says ECB is ready to start cutting interest rates, but that inflation is expected to bounce around the current level over the coming month. We get inflation data this week, which is expected to jump. Headline inflation jumped to 2.5 from 2.4%. Yesterday we got the German IFO numbers out, and a little bit softer. Expectations 90.4, just a pip lower, but up over last month. Current conditions again softer than expected, actually down on last month, and the overall climate index also softer than expected, but coming in unchanged over last month. So green shoots looking a little flatter again in that data. This morning we did have some ECB inflation survey numbers coming out. I don't even know if they put them on the calendar for this one. I don't think so. It's a fairly new release they're doing now. Anyway, 1 year inflation expectations came out at 2.9% as expected. That's down from 3% previously. 3 year expectations 2.4 versus 2.5 estimated and prior. So those are moving slowly in the right direction for the ECB as well. A quick kick back to last week's data. US and Canada durable goods came in okay. A decent rise in headline orders, up 0.7%, were expected to fall 0.9%. All the other metrics green as well. Over in Canada, retail sales came in a little bit soggy, minus 0.2%, worse than expected. Core sales down 0.6% as well. On a first look, it looks like bad numbers, but they do release a flash estimate as well. These were March numbers. They released a flash for April showing retail sales apparently will be up 0.7%. So that was a bit of a counter to that data there. Then we got Michigan numbers as well, and a bit of an improvement in the main components there, though many of them still less than last month. These were final numbers, so just a bit of improvement from the flash. What did go the right way, and they've been a bit volatile of late, is the inflation numbers. They pulled back a bit. There was a very strong jump to 3.5% in the flash number. That came down to 3.3%, and the 5-year came back to unchanged over last month after going up to 3.1% in the flash number. Fed's Kashkari says inflation has moved sideways recently, and we shouldn't rule out anything on the policy path. Goldman Sachs have booted their first Fed rate cut to September from July, so we're still getting a bit of a push out of those cut expectations. Now, there's a bit of geopolitics to talk about. We've getting a bit of a step up in rhetoric in the Ukraine-Russia situation. For those that who may not know, obviously the West has been supplying Ukraine with a lot of its weapons, with a bit of a proviso that they don't use those weapons inside Russian territory. It's a bit of a open secret, shall we say, because Ukraine have just been doing that, but the US, for example, maintains the line that it wants the Ukraine to prohibit using those weapons. So it's the worst kept secret in the world at the moment. But this is politics, so denying something or publicly agreeing to something are two different things. So there's been a bit of a step up in rhetoric regarding whether Ukraine can officially use some of these Western weapons in Russian territory. The NATO chief Stoltenberg, he's never shy to come out with a comment, says he's backing a call for US weapons to strike hard inside Russia, and says Ukraine's use of Western weapons against targets in Russia wouldn't make NATO part of the conflict. That's a bit of hopeful thinking, because Putin has already warned that if these weapons are hitting Russian targets inside Russia, they will have no qualms but to retaliate and hit Western and NATO targets elsewhere. This is all into a bit of a step up in rhetoric, which could get a bit nasty. Now, obviously, there's some blurred lines because Russian territory now includes the bits and pieces that they've taken in Ukraine. So it's a bit of a grey area as to who owns that. Russia by military control, Ukraine by sovereignty, shall we say. But it is a big step up if it becomes official that Ukraine can use these weapons in Russia. Russia may then retaliate, and we could get a big leg up in risk off based on that. So let's hope it doesn't go there, obviously for the wider ramifications, but this is what's happening at the moment, and we need to pay attention to it. So we need to keep an eye on those headlines. And that's all I've got for the moment. Kay, anything else you want to add or bring to us?
Well, not really, but on that thing, and last week there was a bit of articles and observers saying that the Russian have already taken away the border signs with Estonia, and Estonia is part of the NATO as well. So yeah, I think you're somewhere right on saying that there is a bit of a risk, and it's Yeah, the comment ping pong has upped a notch, right, over the weekend, and yeah, we need to keep an eye on that situation, because any excuse may be used to escalate some of it again, right? Um, Other news, not really much. We had Bowman and Mester out earlier today, and Bowman still thinks that they're okay to continue to bring down the balance sheet, and that the reserves are not yet near ample, given the sizable take-up of the RRP. The Yeah, that's still, and then Mester as well sees need that the Fed should up even the assessment, the use of words to describe the assessment of the economy. I thought that they were already over communicating on some stuff, but she says that the Fed, she expects the Fed will consider communications as part of its next monetary policy framework review, and that goes again 180 against what Jordan said of the S&P. They just don't
Yeah,
want to communicate. So that was a bit of a strange comment I found, because I thought the level of communication was already quite high if you look at expectations and plots and dots and whatever. Yeah, still don't seem to be enough. And but Bowman still being her hawkish self in the meantime. Just before moving on, I guess you're going to move on to prices. Just to note is that this week we will have quite an active schedule on the bond issuance front from the U.S. Treasury. So we're having a few active days, being last week of the month. There's bits and bobs going on, so people may, around the time of those results, keep an eye on what's going on in the yields sphere when those happen.
yeah. Thanks, mate. Let's just call that up quickly. Here's what have we got coming up. Yeah, so
So we
we've got
got twos
quite a
and
bit.
fives
2s,
today
5
already.
years. Sorry.
So we got twos and fives today already. The 7
Yeah.
tomorrow.
Yeah. So oh yeah, scroll down a bit, might help. Yeah.
Yeah.
So we got quite a bit coming through this week. Lots to keep an eye on there as well. We'll have a quick look at the calendar just to see what else is coming. It's so weak on the data front. Not a lot out today, bar US consumer confidence. We need to keep an eye on the inflation expectation numbers there. We do get some house price data later on as well. Then we start to get some of the flash numbers, CPI numbers coming through from the Eurozone. We'll have the regional German numbers coming through the morning ahead of the headline flash number late in the afternoon tomorrow. Not a lot from the US on Wednesday. Thursday, got a bit of data from Switzerland, data from the Eurozone, as said, more price data, Italy with some PPI. GDP, US GDP is on Thursday. This will be the first revision, which can be one of the more volatile revisions. Once you get into the third, fourth, fifth, and sixth ones, it doesn't mean anything. So this one could be a bit market moving if it's better or far worse. But as I say, it's getting further and further in the rear view mirror for that one. Then we get some more housing data, pending home sales later on Thursday. Friday, it's quite quiet. Bit of data out of Japan. We get some retail sales numbers from Europe and some CPI data as well. More CPI data, shall we say, including the flash number from the Eurozone. Said it's expected to tick up to 2.5% from 2.4 in some expectations. Then on Friday as well, we get PCE numbers via the Incomes and Outlays survey there. So this is a bit of expectation. Our mate Timmy Leaks was out with a piece a week or so ago saying that some metrics might be pointing to a bit hotter core PCE than is currently expected. But we'll look at that as the week progresses. So not an overly busy calendar, but there should be enough bits and bobs to keep us going through the week. Any other items you're keeping an eye on, Kay?
Yeah, tomorrow, South African elections. It seems like the line where the market could be positive or negative for the number of ANC, the percentage that ANC could get is around 40-45 below or above. There's a lot of promises being made. Eskom already said that there won't be more power cuts beyond. The market took that as a positive for a while, but now we're already back to levels. I still think any initial positive coalitions also could be short-lived because the underlying problems just remain the same in South Africa. And we do have Mexican elections at the end of the week. So that's something that we can have a look at later this week, perhaps. And that may be an interesting one then for the Mexican peso end of the week, next week then. So those are the two things that I'm keeping an eye on as well.
Those South African ones aren't we? We won't get the results until this weekend, the next weekend, will we?
Yeah,
they come through pretty quickly.
Yeah, and perhaps it's still a bit of a gray zone when we would get results out, whether they are like on the money or not. So yeah, it can last for a few days. Yeah.
Yeah. So if you're trading any of those pairs, you need to keep your peelers peeled for that. Right, where should we start first? Ali, you were looking at your shorts in euro sterling, your long euro dollar. Did you do any slicing and dicing? You got 20 pips up on your euro dollar. You know, you keep saying it. That's why you take some profit off the table, take a bit of partial. You know, so if it doesn't go exactly to your profit target, you've put some in the bank. You know, this is a bit of a sticky area. I've been saying this 70-80 zone up here has been pretty sticky. So your profit was, you know, above that prior high. So that might have been a consideration to look at while you were doing that trade. And as I say, if you get up to this 80 zone, you've had enough time to know today that it's been a bit sticky. Just looking at the short-term chart. So that, you got 35% of your position off. Good. That's the way to do it, mate. That way, if it does go back and spank your stop, you've put some in the bank. You can always bring your stop up a bit behind it and lock it in. But yeah, very tight at the moment. Vol still pretty low. I think we're going to be facing that again this week in between headlines. So be prepared to see some quiet trading interjected with any data points that show some big variations. You get a volatile or volatility move, and then things might go quiet again. So if you get a chance to take some profit, take some profit while it's there. But for now, euro dollar 108, 109. Do what you want in the middle for me. Euro sterling. This looked like I was sitting around watching this yesterday afternoon after being out, got back. And this looked like a bit of a low liquidity move, messing around with a big figure. Cable was going for a wander. Euro dollar was half asleep. No surprise to come in this morning, seeing a little bit higher back to where we were before the long weekend. Still not out of the woods. Again, we're just holding below this 20 area. And we are only dealing with little 10 pip moves here and there. This 20 area has been an area of support every time we've attempted to come down to the lows around 85. So it's no surprise to see it acting as a bit of resistance. The other number, 85, 30, 35 above, still not getting anywhere close to looking like it's breaking at the moment. This one, as we know, you have to be patient with it sometimes. It can do this sideways business for, you know, a good couple of weeks before it then decides it wants to make a move one way or another. So if you're trading it off the bottom here, don't get too despondent yet, but be prepared. Levels are levels until they're not, and there's still a chance that it could break. So as long as you're prepared, I've gone back in with my stop reverses. So if we do break through this zone, I'll be getting short underneath, as long as it's a looking like it's a proper break rather than a bit of a stop run. But for now, I've already took some profit off last week when we had this move up towards 30s, just to put a bit in the bank, and I might do a bit again if we come up here, and then I can always reload it on another dip. So patience is a virtue in this one, and you require a lot of it at the moment. Look at some of the other pairs as well. Dollar CAD's back down to the danger zone. Had a little bounce again off this zone down here around 136.10.15, but it's come off pretty quickly from those highs in the 137. So maybe again we're looking for a bit of trouble down here at the 136, or else we could just be doing a nice bit of range trading again as well. So that's another one to keep on the post-it note or in the back of your mind if you're going to be trading this one. Dollar yen still messing around the 157, which is now the new 156, which was the old 155 and the old 154. Any thoughts on this one, Kay, or are we just still trying to ignore it?
We just see what happens on every dip, and that's the only thing I really want to say about this. Is the market is the issue is still that not the issue, but the fact is that if you're short yen, you're getting paid for it, and that why would the market let that go? Even though the JGB yields are creeping up, but we're still looking at quite a bit of an interest rate differential, and yeah, I mean it's still the same thing, right? When the market will buy the turn, that could be the signal for it to all turn around. It will happen, but will it happen from? If you just look at the dollar yen, will it happen from 157 or 167? You know, or yeah, I mean it's still not a market where I'm looking to be long yen for longer than the occasional spike. Yeah, I don't really have anything else to say. I thought that it may be a little reaction on the yields creeping up, but it's really limited to very, very shallow moves, right?
Yeah, very much so. And Matthew's weighed in from South Africa.
Hi, Matthew.
Always good to get boots on the ground view as well. And yeah, this is a thing. You've obviously got what happens on the ground with what the press and foreigners like us perceive things to be. Things are obviously never going to be as good as they see on this side of the line, shall we say. So I'm sure there is plenty of shenanigans going on there. But at the end of the day, in general terms, markets just want to see whether things are stable or not, foreign investors and the like. But I'm sure there is plenty going on over there. I hope it goes well for you, mate.
Likewise. And it seems we're about on the same line as well regarding the rand with Matthew. So thank you, Matthew, for that.
Yeah, thank you very much, mate. One I'm going to look at quickly. Aussie Kiwi. I've had a little bit of a nibble already. We're down to our old mate, down at the old magnet line 108. We've got a fair bit of tech confluence coming in down here. I've just noticed we've got some other moving averages down here, the weekly, but we've got a bit of confluence on the daily, both 200 and 100 coming in around that 108 level, and a longer term trend line in there as well. So I'm just having a little bit of a tech play long on the confluence down here. I won't give it a lot of room. 85s I'll be out. 107.85s I'll be out. But I think we've come a bit away on the back of the Kiwi move after the RBNZ. So I'm just going to wonder if we've hit a bit of a stretch point in this one. You got any thoughts on this one, mate?
Yeah, I mean, as the people in the room know, I'm long both a little bit, but I'm more how should I say, and my amount reflected as well. I'm a bit more confident on the Kiwi than on the Aussie, really, versus the dollar, that is. But and it's also a little bit of an early end of month play as well. On this one, yeah, you have the differentials. You have, I think the technical level is good. Now the market seems a little confused about what's going on in the Aussie right now, because the data are not really spectacular, and so RBA still looking a bit hawkish. But the market's, I don't know if the market is really on board with it. So this move, as I said, you play purely on the takes if you want, but I don't see the fundamentals driving it anyway and in any
Yeah,
direction right now. That's
yeah.
really, I'm very neutral on the direction on this one, to be honest.
Yeah, no, absolutely. As I say, this is purely a tech play rather than a fundamental play. Yeah, the RBA have always kept their. We discussed hikes, but decided to stay unchanged line for the last three meetings, I think. So that's a little bit less. Or the market saying you're not going to hike, really, are you? Whereas the RBNZ have obviously shifted as well. Obviously, a bit of commodity play perhaps in this one as well.
Absolutely.
With the moves in copper, gold as well, coming off those big highs. And I was actually I was looking at the rand myself because a lot of these moves, it seems, that rand strength taking us down to that low 18s, pretty much coincided with copper peaking as well,
And
and
gold.
gold peaking. So yeah, you can see the heavy influence here in the rand. Particularly when it comes to commodities. And Aussie, also another big commodity country as well. So that may be reflecting the pullbacks we've seen in some of these precious metals. I did see silver had a nice move back down to the break point, and then off it went again.
Yeah, yeah, very much so. Very much so. And that's where, again, the correlations between various instruments are really far sought right now, because you would imagine that silver being bid like it is a reflection of somewhere better or not worsening economic conditions. And if you and it's not reflected, if you look at it, it's not really reflected in the currencies, because well, I'm not going to say it's a complete play on China's revival, where the Aussie could get traction from it as well. But if you look at it, global data are not extremely supportive. Now, I'm starting really to wonder that have the gold players taken gold to where it was, but finding it a bit high to run after it, and shifted their attention a bit more to silver, because it was quite a rally from that 30 level, right? So I'm starting to wonder whether there is more involvement now in silver than there was before. For many months, gold was the sole driver, right? And but now all of a sudden we have seen silver starting to catch up. Or is it the dollar play? It's possible, but it's not really very much reflected in any other in any of the dollars. Although the dollar is a little bit heavy, but yeah. So it's an interesting one on that silver. But at least it's clear. $30 is quite a level, yeah. Gold in turn. Gold in turn is yeah, those 2330s, 2310s, then 2300s.
There we go,
Yeah.
back again. Yeah.
Go, go, go ahead, Ryan.
No, sorry, mate. I'll jump to gold, and you went back. You were talking about the silver levels.
Oh,
But,
okay.
yeah.
No, well, yeah, just looking at the relation, but and also it's hard if you. That is something that I wanted just to add. If you plan on trading gold and silver, and I always like to look at correlations that you can see other stuff correlated. Like for instance, the Aussie and copper, and but I find I don't find too many correlations there, because if you look at, there used to be a very good one between silver and sorry, between gold and Swissy, but that's gone completely out of the window. Now Swiss is strengthening just a little bit, but I think it's perhaps more geopolitics and early month and perhaps. But it's very hard to find correlations. So if you want to trade something, just purely trade that, and don't look for too many FX related correlations right now.
Yeah, very much. It's easy to get stuck into looking at too many other assets just to try and trade one. You know, when you can just trade one on its own merits and let it go and see what it wants to do. Right, Kay, do you want to take it for a few?
Yep. And let's have a look at what's happening exactly in those antipodians, and especially the Kiwi. You know that I've been watching this Kiwi for a good while. Here this 61 40 50, it's always been it's always been on my radar. And we had a move below on Friday yesterday. I started to look at it and said, like, this looks to me like it may want to go for a little bit of a walk, and then I put on a small, perhaps an early end of month trade on. But as everybody know, I'm also using the slice and dice theory, so I bought it around here somewhere, and then I let a little bit go in the zone. But it does look like we are now wanting to go for a walk above. So we could be heading up for the 62 level. It may be a very slow grind. Some may be disappointed if we get back under 61 35 40. So that's something that needs to be monitored. But this is what I'm going to try to run this week to various degrees, and perhaps wait to see what's happening tomorrow if the US corporates need to go for a bit of a shopping spree on value date end of month. But this is one that I'd like to keep, and perhaps even build up if we see a bigger setback to see if we can have a look above 62 towards the end of the week. Aussie, not as clear that level as the Kiwi level, but we did see 65.85 below 66. All of a sudden we came in with the bids. And then this 45.60, we are working on it. As I said, it's not as clear as on the Kiwi, but we are working on this little zone here. We've seen several spikes, came down, bounced, down, bounced. So this is a bit of a zone here. Exactly 66.45, 66.60. Okay, if we get through it, I guess we are going to have a look at it, look at 67s again, bit of trend line action coming in the 67 zones. It could be if the models are correct, if my findings also are correct, it could be that we hit these kind of levels towards the end of the week. It will all depend on data, of course, out of the US as well. But the heavier data out of the US are right at the end of the week, so it's a bit early to really start to trade that on a day intraday basis. So yeah, this is another one that I'm in, but as I said, to a lesser degree than in the Kiwi, really, because I'm less convinced about this one. Swiss pairs are not really cooperative, and I think and we have seen, even though it should not, according to my own findings, it should not be that Swiss is really bought towards the end of the month, but I am starting to find it a little bit running out of steam. We have done, you know, come a long way. And if you can't trade yen on the back of geopolitics, Swiss may be one that is now going to get correlated with those geopolitics, at least in unless we see more clarity, perhaps. And so I decided to really actually get out of my Swiss positions. It's been a good run, and I just don't wanna run into stuff that driven by geopolitics. We can get back to low 98s, for instance, on the Euro Swiss. Um, it could be just a blip. We could go higher again and move over to parity, but sometimes it's reflection time, you know. And same thing I'm finding on stuff like this sterling Swiss, even though um, technically it's still doing the right thing. We are above that big zone. But then I've also looked at the month-end expectations and a bit of geopoles as well. And traditionally, the sterling does not really like too much geopolitical uncertainty either, especially when it's involved directly with Russia, for instance. So decided also to let mine go. I did let some go. It's a longer term, this one. But I did let some go. People know in the room. I did let some go here and here, and then I just let the rest go today. Just sometimes you need to let the market do its thing a little bit, and yeah, just try to find its next move. Could be that we are getting back into this zone and then start to bounce again. This is one that I'm going to monitor very, very closely. Angela, Aussie pattern looks to me like it wants to complete the upside. Yeah, where do you see it, Angela? Where do you see yourself the Aussie going up to? And then, as I said, we need to look at for what's happening this week on those elections, dollar rand. So we did get the bounce from where I expected the bounce to come. Unfortunately, it went a bit quick, and I didn't get the occasion or to have a look below 18 and then started to bounce. That is what I was expecting. It to go for a few stops and then bounce, but it didn't. Now we're back in a bit of a resistance area here. Call it up to 1850, 55. Not sure if we're going to break above before the elections, or if we're going to have a little look back down, depending on some of the results. But this is one where I'm going to keep a very, very close eye on. Get back below here. I think this time I'm not going to want to miss the occasion, or even, yeah, take out the butcher's glove and catch a knife here. Euro dollar is bid. Euro dollar is bid, but we are still below 109, right? But it is relatively bid, and I think a bit reflective of those pairs that we see, like in the antipodians as well, and perhaps even some yen cross, or also euro dollar is still bid. We could go for a bit of a walk through 109, I reckon, before the end of the week. I'm eyeing any setbacks here into those low 108s to perhaps load some up. Perhaps tomorrow, tomorrow afternoon could be an occasion. What else am I watching? What else am I watching? Yeah, this one. I'm pretty disappointed with those moves on the cat, by the way. I really thought dollar cat should have held 136.90, 136.65.70, 60, and it just doesn't. And we shot up, stopped door at the top end of this, which I also said be a bit careful for this level. But this is a much bigger move than I thought that would happen. I think the market got a bit ahead of itself there, and we are now back to this level watching here. EuroCAD a bit similar, but EuroCAD is holding a lot better thanks to the euro dollar. There I'm monitoring what's happening 147.85 figure also. 147.85 figure also. That's what I'm going to monitor there with a small position long. Any general comments on end of month dollar flows? Yeah, they should be, in theory, Michael. They should be sellers versus most currencies. But we know about the dynamic hedging. People tend to go a bit early, and then tomorrow we are trading value date end of month, where we could see some US corporate interest in buying dollars. It was apparent last month. Last month, the models were pretty good. Also for the value date end of month, it worked. But we have seen the months prior where this value date thing hasn't worked at all. So I mean, we have to take everything with a pinch of salt right now. But the way that equity markets are moving, especially the US ones for the dollar, it should be relatively dollar sellers for month end, Michael.
Just on that, Kate,
Yeah,
we've got this T+1 thing kicking off today.
yeah.
Is that going to affect the month end stuff?
Now there is one question, because I thought, but then it does seem everything is going to be rather concentrated on stuff like equities or so, but it could be because some of those non-US funds are still crying their mom because they don't have such a big window to do payments. Now, will it work for the FX? It may. My first reaction would be that it reduces the month-end interest, because they will have to do payments earlier. So they maybe, I'm not saying panicking, but they say like, oh, let's get all of them out of the way. But in a way, if you are a foreign fund investing in US assets or in other assets, and you're an FX neutral fund, you will still have to do some FX, I think, at the end of the month, but it may be a bit distorted. So I I say let's watch a couple of months to see where or to see what kind of influence it could have. It may not be apparent this month, although it kicks in, but maybe in the months to come, it will become a bit more apparent whether we can still model the month end or just have another plan thrown in the bin.
Yeah. Just to explain quickly to people who may not know, that settlement for a lot of assets is what's called T+2, i.e. you trade date and then it settles 2 days ahead. There's a shift which kicks off today for US. I think it's US, Canada, and Mexico are shifting to T+1. So 1 day of settlement. Europe and the UK are still faffing around over what they want to do. So it just means it's happening today when this kicks in. So everyone should have been prepared for it, but just in case there's any funky moves that might get the blame, this settlement shift date.
Thank you,
Back
mate.
to you, mate.
Okay, and this is another one I've been playing around in it more to the short side, but we are on a bit of a level here in this Euro Kiwi. Okay, anywhere between 176. 2035 is next round of support, and we stopped on it right now. So it does seem that the market is in for a little bit of profit taking there. I did as well, but I do think that this could end up somewhere in the mid 175s before the week is over. Just trade this bit of a triangle right now. So keep an eye on what happens if it loses another big figure from where we are, which is quickly done. They are fast, relatively fast points. Those Kiwi points. Okay, so this is one that I think could see a little more weakness into the end of the week, and then and end up somewhere here, where I'll be a happy TPer. Inverse head and shoulder on a monthly. Back to parity. Oh, hang on. What are you? What is Angela? Oh, medium term 80. Okay. Oh yeah. Oh, that's a big one. That's a big a big call from here. But yeah, I mean, if that would be the side, I think a lot of people will have a lot of fun in this if we can do another 30% or 40% in those currencies. Ryan, that's enough for today, mate. Back over to you. Thank you.
Thank you very much, mate, as always. Yeah, thank you all for coming to the Flow Show. Bit of a short one. I'm going to be off for the rest of the week, faffing around at home. Got some renovations to do with the kids and stuff, so I'm going to be off for half term. for the rest of the week. So enjoy K-Man's company. Do trade well this week. Be safe. Make those pips, and we will see you all. I'll see you next week. Kay will see you tomorrow. Have a good one, everybody.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.